Welcome to this very special edition of the KAJ Masterclass Live, the show which ensures that you profit from your time spent here with experts, either through their industry insights, information, or simply learning from them. And today we have David Snider, founder and CEO of Harness Wealth. He's also an author and he's on a mission to make bespoke financial advice accessible, intuitive, and valuable using their holistic wealth platform. Prior to Harness, he was CEO and CFO of Compass, a real estate tech company, and before that, he was also an investor at Bain Capital Private Equity. Welcome to the show, David.
Thank you for having me.
You are welcome. Welcome to the show. Welcome to India in this online form, David. And I'm sure not just in India, but a lot of people across the globe will benefit from what we are going to talk about. We'll talk about democratizing wealth management. But before we come to democratizing wealth management, let's talk a bit about your journey, your background, so that people know a bit more about who they are listening to.
Sounds great. Is it helpful to start at the beginning or to go backwards? You tell me what you like.
A bit about your background, a bit about your journey, whatever you feel is important enough for the audience to understand and know you better.
Yeah, I mean, I think there are people that are born entrepreneurs that have to be the ones that are starting businesses from scratch. I think I never been averse to working for others and learning. I think the opportunities that I've had to build, whether writing a business book when I was still in college, helping in the early days and for half a decade to build Compass or starting Harness, really has come from when I've spotted an opportunity or something that I think should exist, often for my own benefit. And when I look around and can't find it, sort of feeling like, hey, if, not me, then who? And if, not now, then when, sort of thing. And so I started my career after college in traditional professional services. I worked at Bain Consulting, helping large financial service companies and private equity firms diligence potential investments. From there, moved over to Bain Capital, where I was eager to try my hand in investing and understanding private equity. And it was sort of after that experience that I sort of said, I feel like I've got this great base of skills. I'd love to be in an environment where I feel like my role is really shaping the future of the organization. And for a hard to do when you're, one person joining or part of an organization of thousands. And so ended up through business school getting reconnected to a friend I knew through a nonprofit who was putting together the team to start Compass. And that sort of set me on the journey. I had been interested in opportunities to innovate in real estate. I think the global markets of real estate also have many of the same opportunities. Often the US is way ahead in some ways, but when it came to, the real estate experience, it felt pretty antiquated. Back 10, 15 years ago when we were, first kind of starting to build here. And so ended up spending a bunch of time with Compass, and sort of the insight that we stumbled into was the value of helping advisors deliver a better experience rather than what most Silicon Valley companies at the time, and I think still largely today, are focused on, which is how do we use technology to remove the human advisor and automate everything. And I think my kind of differentiated approach in starting Harness has been a large portion of the market really wants a human for a variety of reasons: psychological, nuance, complexity, et cetera, and building solutions that bring the best of consumer quality technology to that market really is where you can create a lot of value in some higher end segments. And so that was the kind of genesis that led up here. The other piece is I had a very expensive mistake personally. So despite having been a private equity investor and a CFO and an MBA, when we were first getting going with Compass, there was a question around the way that we structured the equity stock plan. And so, at the time I was still at Harvard Business School, figured, gosh, let's just ask the experts, and turned to two professors there in the entrepreneurial finance department and said, hey, should we do it this way that some people are talking about? And they said, no, don't worry about that. Do it the traditional way. And in the end, that became a multi-million-dollar mistake for me and some of the other early folks there. And so I think that was part of the genesis of Harness, which was when it comes to tax and financial advice for people that are business owners that have meaningful equity in a business that they're part of, there's just a lot of complexity and judgment decisions, and being able to create a platform to help people navigate that with free tools and information where that can be enough, with sort of bite-sized advisory engagements where that can help drive people to the right answer, and then where it's additive, actually having full ongoing advisory relationships that are occurring. That's something that we do as well, which is sort of the core of how we drive the business growth. So I'll pause there. Happy to dive into other pieces, but I think unique journey in the sense of the confluence of some professional choices, some sort of personal pain points, and I think been very fortunate to spend the last 12 years kind of building businesses, hoping to, and hopefully clients would say currently doing a good job of raising the bar on what the client experience and advisor experience can be in real estate and tax and wealth management.
Right, David. Thank you for that. Now, let's talk about Harness. Let's talk about wealth management. So, when we talk of wealth management, it's already about, HNIs and all those big family offices and all those people. And you talk about, making a mission to make bespoke financial advice accessible, intuitive, and valuable. And it looks like it is for a lot of people. Is everyone that rich to have your, this sort of an advice? There are big guys already handling the big guys, the family offices, I said, HNIs, ultra rich guys. How does this work in today's world? How is your Harness for common person? Can you make him rich, or only the rich will become ultra rich? Help us understand Harness mission better in this background.
Yeah, I mean, I think the ultra high net worth have always been reasonably well taken care of because they had so many resources and were generating so many fees that a lot of people were happy to serve them in different ways, going back for centuries, obviously. In the US market, at least, there's been a tremendous amount of consumer innovation, going back to the 70s, 80s, and 90s, of ETFs, of robo-advisory, of other ways to create access at lower cost for a broader base of individuals. What we found, though, is that the in between, sort of that upper middle market where people have complexity that exceeds the capacity of what some phenomenal DIY-oriented products, whether that's DIY tax or that's DIY robo-advisory, those things can't answer the judgment calls. They can't, sit with you and help you understand what are most important to you in financial planning, what's a threshold of, cash on hand that's going to help you feel comfortable at night, et cetera, and give you the comfort when there's market volatility to kind of stick with those plans, et cetera. So our focus is where just the right information can be helpful to someone. We want to be a source of that insight for them, because as they become more successful, we can then, help them with more complex situations. For those that have complexity, but not necessarily, massive amounts of wealth, that is also an opportunity that we have to serve them through our market. So it really is taking themes from the ultra high net worth segment, the combination of strategic, tax advisory, financial, trust and estate, bring them together with more consolidation, information, ease, knowing who to work with, et cetera, that drove a lot of the early insights. I mean, before starting it, when I was an executive in residence at Bain Capital, I reached out to and talked to the head of the Walton family office. The Waltons, founders of Walmart, one of the largest families in the world in terms of wealth. Folks that work for Cascade, the Bill Gates's family office, and others, and sort of really distilled down some of the pieces of what they were doing that were applicable, not to the entire market, but to a much broader segment. And that really came down to the right tax advice, principally, the right integration of tax insight with financial planning and wealth management, with to some degree where it makes sense, trust and estate in other areas. And so that's what we've tried to replicate, is a very bespoke solution that people can come, whatever kind of that initial tax or financial pain point is, and we can hopefully help guide them towards an answer that's going to drive some value.
Right, David. We'll come to the use of technology for the common person. We'll come to that. But first, in terms of, the human angle to all this thing about wealth management. So you are for much more human use. A lot of people are for use of technology. And with the times that we are in, more and more sophisticated technology is coming in. And people are using, either in the stock market, in arbitrage, in every sphere you see, people are using it. Why do they need the human for? Because you can't blame the robot, so you need at least one human to blame. Is it because of that? Or is it because, because it is just like a human thing? Is it necessary to have a human in the process? Does the ultra rich need a human being to interact with? Does a human actually can stand there in front of them and explain things the way they actually want it to be? I want to understand this importance of human beings that you talk about in this whole system. Is it just, for the time being, or is it going to stay for the people who are actually bringing a lot of money to the wealth management industry?
Yep. So again, I think there are a few segments. I mean, to the preface of your question, I've never met someone with over $100 million, over $50 million that is not paying advisors to help them navigate their financial well-being. They all have a CPA, hopefully one that's a bit strategic, meaning a tax advisor. They all have some combination of financial resources. That could be, active managers picking alternative investments. That could be, holistic wealth managers. That could be, personal bookkeepers, et cetera. So I think if you're looking to the high end, there's no shortage of people. I think where they are seeking to create operating leverage, decrease the costs of the advice, is the same thing of what we're trying to do in the broader market, which is, shouldn't be so damn painful, to file taxes in the US in terms of gathering files, knowing what to do, knowing where something sits, trying to chase your advisor, et cetera, to get that done, making sure you're not missing opportunities, et cetera. Same thing on the financial advisory side, et cetera. So where technology can have the greatest value is in reducing the operating costs, increasing the seamlessness, increasing the insight, visibility, and hopefully frequency of getting to the right answer for clients in the, we'll call it upper market, in the middle market. I think in the mass market, a lot of the right answers are easier to get to on a purely technology basis. But, whether you've got $1,000 or 100 million, accountability, making sure that you feel like someone really understands, the situation, the trade-offs, et cetera, can be valuable. And so, we only introduce paid advisory services at a threshold where we feel like it's going to create positive ROI for potential clients. But for some people, the guidance may be worth it, in terms of creating the right pathway towards savings, having the reinforcement to make those tax deferred decisions, 401k, HSA, whatever it may be. So it's very personal, but I think the most accretive technology is getting rid of the stuff no one wants to do. No one wants to be spending time in their own personal administration of tax or financial. No advisor wants to be spending time in collection, chasing, minutia. And so the more that technology can drive collaborative conversations, the better. I think when you look out 10 years, do I believe, or even 5 years, that AI bots and other things that are leveraging a wide enough body of knowledge can help a much broader range of people get to the right answers? Totally. And I think they can create the same accountability. They can help guide people, 9 out of 10, maybe 98 out of 100 times, to the right answer. And then it becomes much more of a question of where are situations complex enough? Where is there nuance that, it still makes sense to rely heavily on the advisor? And I think that really just is going to stem from the complexity of the situation. But there's a massive amount that technology has done and can continue to do in making relationships more effective, more insightful, and hopefully more valuable.
Right, right, David. So to understand, you talk about massive amount of technology, but this technology at the high level, it costs a lot of money, or is it very cheap? You talk about, that how an average person can take advantage of the same technology strategies the rich use to grow their wealth. Tell us a bit, take us into that inside world of these technologies, or is it available but people are not aware of all these technologies and strategies? Help us understand. Those people in any part of the world, they may not be able to take your services, but can certainly make do with the advice that you give at this point in time.
Yeah, I mean, I think it varies considerably. I think the good news is the needed solutions and what you can take advantage of generally is aligned with the tiering. So yes, like if you want to create, again, focused on the US market, which is where, we are focused, if you want to create a bunch of different trusts in no-cost states and have trustees and administrators, like that's really expensive to do, but it also only adds value when you've crossed a certain threshold that you're not going to spend, all the resources that you have in your lifetime. It's thinking about how you move that most effectively for the next generation. So a lot of the information, is available. I think we are not a solution for end-to-end DIY usage for the mass market. It's when people all of a sudden have business ownership, business equity, some level of complexity, that our goal is to apply the same, or honestly a better digital experience, a more sophisticated way of finding the right human expertise and pairing those things together. And so, the beauty of technology is, the ability for us in software to leverage LLM, language learning models, to sort files and make things simpler, only possible now because of massive investments by others in different applications that can be brought down. But that's just one micro example of, if you create efficiency for the underlying advisor, that can translate, into value for the underlying consumer.
Right. So tell us a bit more about Harness, because you talk about your platform, and recently you talked on TechCrunch that this new tax advice platform will be of use to an even broader clientele than just the super rich. So help us understand this. If I understand, I read in certain news reports that some companies are in fact lobbying to make this tax filing difficult, so that more and more people have to use their software and cannot do it themselves, or use cheaper options. In this backdrop, how does your platform come in? Are you competing with those guys who are lobbying, or how does it all work for the common person?
We are not. In the US, there are 120 million or so households, plus or minus. 80% plus, or maybe 2/3 at least, ought to be able to file their taxes easily, seamlessly with the government. We're one of the few countries where, more often than not, you have to pay the government. That feels a little bit crazy. And so the goal that we have is, if you can do it yourself, you should do it yourself. If you can take advantage of the government's new program of file direct and not pay anything, awesome. We are fully supportive of that. Where we come in are for individuals that have a level of complexity where they feel like, hey, either I no longer have the time or I no longer have the insight to be able to do this myself. How do I find the right person at the lowest cost relative to the needed expertise who can deliver the solution that I'm looking for? And if we can do that and provide a more delightful experience because of the quality of the service, coupled with technology that makes things easier, and has more visibility for the client, that's a win-win. So that's really where we're focused, is not, again, those that could file directly, and I hope will be able to or should, but those that are choosing to find a resource to help them navigate this stuff because they don't want to or can't from a complexity standpoint.
Right, right, David. So, how does this future of wealth management look like? Maybe 1 year, 2 years, 10 years will be too much, but say maybe in the next few years. Is it that only the rich will be able to afford a human and the best technology robots? For the common person, it will be robots, but of lesser intelligence. Humans will be out of their reach. How does that look like? Or am I wrong? You tell us, how does it look like? You are the expert.
Yeah, well, certainly I think the expectation whenever new technology comes into play often is for a rate of change that is not matched by reality when it requires human adoption, of something new. And I think that's especially the case when it relates to people's conditioned behavior to interface with a person in solving that issue. So it often takes like a shift in generations, or in the case of wealth management, of where wealth lives from a generational perspective to really change those things meaningfully. To the underlying part of the question, I think that technology that we build, technology that others build, allow advisors to be more efficient. And with that efficiency, they can either add more value to existing clients at the same price point. They can serve more clients effectively, at the same price point. They can potentially serve more clients at a lower price point because the incremental cost to serve is lower. So generally speaking, when you look at adoption curves, technology often starts benefiting at a high price point, a smaller tier, and then over time ends up benefiting a wider and wider audience. You can think about like flat screen TVs, where once upon a time that was a 25,000, 10,000, 5,000, now kind of standard, can't find one that's not flat, even for a couple $100 type of solution. That generally is the curve of technology. And it really just depends on the competitive environment and the nature of the industry as to whether that is just price decreases or it's, incremental value functionality that's delivered at the same price point. So I think, our goal is sort of in line with kind of the way that you started the podcast, not, hey, exactly what you get with $1 billion is what we can offer you, with $100, but for this growing segment, at least in the US, where there is complexity from, being a freelancer and generating $100,000 it's not W-2 income, or having a business, or working for a company that you have equity in it. Those things all create complexity. What's the right entity? Where do I file? What's appropriate to deduct versus not deduct from a tax purpose standpoint? What are the ways to set up investments so that the most tax efficient ones are in tax deferred accounts versus, or the reverse. And so that's what we're really focused on. So I think to the extent that there are folks listening that are based in the US, maybe they're Indian citizens, but are living here, we serve a whole host of individuals that are in the US, have assets in the US, have exposure to US taxes, whether they're a US citizen, or not, and helping them navigate this complexity, hopefully better than other solutions that are out in the market.
Absolutely. There's much to learn from you, David, and I'm sure we can learn a lot from your book, Moneymakers Inside the New World of Finance and Business. So tell us a bit about this book. What is this book all about? Who is this book for?
So the book I wrote, in an earlier chapter of my career, and it really stemmed from my own journey to figure out sort of what the different fields of financial services in the US looked like. It was sort of fascinating to me that depending on, who you asked and what was kind of cover of the New York Times or Wall Street Journal, was it hedge funds, was it private equity, like what was the difference? And so really felt like it was valuable to help demystify these areas that were driving increasingly large portions of the economy or the flow of capital markets to a broader audience. And so I was able, through a variety of tactics, to interview Jamie Dimon, who runs JP Morgan, David Rubenstein, who founded the Carlyle Group, Steve Pagliuca, who ran Bain Capital, Seth Klarman, Richard Perry, other sort of legendary Julian Robertson hedge fund investors, to kind of help people understand these fields. And in the same way, the point of Harness is to give a broader audience of people the pathway to the right solutions, for their financial well-being. This, 12 years ago, when I couldn't have imagined sort of where I would end up or what I'd be building or doing, had that same theme of like, how do we objectively give access to a broader audience, to the people, at least in writing, to the drivers, the history of these areas that are so important for, younger individuals that want to go into financial services or business, are really important for shaping, financial outcomes in the US and globally now. And, again, around that same theme I've always loved, which is how do you create informational empowerment and access to help people find the paths to what they want to do and how they're going to reach the best outcomes.
Right. So any new book about the future of wealth management?
Running a book is generally a labor of love. I think, I started writing Moneymakers when I was still in college. I probably would have made more money, bartending on a per hour basis of the time spent, although it was certainly satisfying to see it, translated into Mandarin and Cantonese and, kind of take on a life of its own back then. But I think what's nice is, I and many others have way more channels for being able to express stuff, whether it's a short tweet or it's a longer post on LinkedIn, or the opportunity to have discussions like this with people that are great interviewers and, can share topics in a live fashion. I think lots of folks, understandably myself included, probably end up listening to more podcasts than the number of books that we read in a given year. So I think it's fun to be able to think a lot about the evolution of really important industries and spaces. And when you've got the opportunity and you're invited, like I was here, to share those, to be able to have conversations about those.
Wonderful, wonderful. As I said, there is so much to learn from you, David, and I'm sure a lot of people would like to learn more about you, from you, about your company, be engaged with your company. What is the best way for them to connect with you, David?
I mean, the best way to start is harnesswealth.com. That kind of gives an overview of a fairly wide scope of things that we're hoping to help folks, as I mentioned, either in the US or kind of with US assets or tax exposure to navigate. And, I'm on LinkedIn as well. And so certainly get a lot of, notes and try to respond to anything that comes through. So look forward to engaging, with any listeners that have an interest in using our services, exploring more, or touching base.
Absolutely. With this, it's a wrap on this very special edition of the KAJ Masterclass Live. Thank you so much indeed for joining us.
My pleasure. Thanks for having me.